Join our new, simpler, free room where we break down the foundations of our trading for those who are looking to gain financial freedom in the markets. Check out Simpler Stream Week from June 21st to the 23rd for live market analysis. And guess what? It's all free right here on YouTube.
Hey, this is Danielle. Happy Monday and happy new low of the year in the indexes. Today we ended up seeing the S&P fall into bear market territory again. Today it looks like we're trading at about 37.56 in the S&P futures after hours, and the Nasdaq's trading at around 11,358. The Nasdaq has been in a bear market for a while. The S&P, even though technically it hasn't been 20% down, I mean it's really traded like it's been in a bear market all year. The only reason it's really been holding up a little bit has been because of energy, in addition to the fact that the FANGs really only started significantly rolling lately, and now that they're rolling, it's really taking everything down with it. So when you look at today's price action in particular, we did see the S&P gap down overnight. On Friday, we had a pretty weak CPI number. Well, I guess it was actually a strong CPI number, which caused the market to drop pretty substantially before the open on Friday. Then we had the S&P futures open up on Sunday night, continued to trade lower throughout the course of the evening, and then once we got to the cash session, we were not ever able to breach the high on the day, and we closed out pretty close here on the lows. If you look at a daily chart of the S&P futures, you can see, obviously we're in a downtrend. Obviously we've also had 3 days of pretty high volatility in a row, 1, 2, 3, after what was a pretty quiet week. We've now also made a downside extension target at 3,800, but the next target that I have is going to be about 3,600. So when I'm looking at where this could go from here, definitely the path of least resistance is down. I am looking for, at the minimum, a return to the 2020 high, before the 2020 high that we saw prior to the COVID crash. I'm definitely looking for a return at that price point. Coincidentally, right around that zone is where I have a ton of support. It's going to be right around 3,500 or so. But even though I am looking for more downside in the indexes, and even though I definitely think, staying on the downside is what makes the most sense, today for me was a profit-taking day based on the way that really everything gapped down. For example, you've got Amazon that gapped down right into this key area of support, which is going to be the lows on the year. You've got the Nasdaq, which gapped down pretty substantially, did make a new low on the year, and it's just shy of my 270 price target. Next target on that is going to be about 260. But the fact of the matter is that when you're going through most of these large cap stocks, and we're seeing how they all broke, Microsoft made a new low on the year. Let's look at Apple. Apple made a new low on the year. The fact of the matter is when you have those days where it's so extreme and the Nasdaq's down, 4.23%, and all these tickers are making new lows on the year, and it's oversold, that's also typically the spot where a big short squeeze can come in. And so when you get these big days, people are always wanting to know, well, what can we do? Can we short it here? It's like, no, you can't short it here. The place to short it was when it was consolidating, when it rallied, when, people wanted to hope and believe that the low was in, but that was never going to be the case because, we're in a massive downtrend. And these rallies are really just a good moment in time to short the rips. So when you're looking at what's happening right here and now, is it too late to short? One thing that one of the members said today, which was true, was, okay, well, in February, was it too late to short? Well, no. Yes and no. If you shorted at the dead lows, here or here, you would have had to have sat through a short squeeze rally before you were eventually right. But in the long term, was shorting here a bad idea or shorting here? Well, I mean, no, because now you would be making money, but you would have first had to deal with this and this. So when I'm talking about, what's a good place to short, the better places to short are always going to be on the rallies, which are going to be here, here, and here. And when you're down on the lows, when emotion is the strongest, and when things are incredibly bleak, that is usually the moment in time where you get a reversal and you get a short squeeze. And it's usually the worst moment in time to short. Now, it can work out, of course. Like, let's say tomorrow we get a massive gap down and, you get one more day of downside before there's a short squeeze. It definitely can work out, but I'm just saying it's just not really disciplined to come in and short at the lows. So, what do? Well, I have covered the majority of my short trades. I still have a couple of them on, but I did cover most of them because I'm looking at the put call right now, and I'm looking at the new lows, and the put call is actually the lowest that it has been. Sorry, not the lowest. What am I thinking? The highest that it's been all year. And actually, I mean, I could even go all the way back. The only time that the put call was this high was in March of 2020. And I'm pretty sure we all know what happened in March of 2020. That was the low. Now, I am in no way, shape, or form trying to call low in this market. I think we are going lower. I think we're going to give back, most of the gains we've seen since the COVID crash. But it's worth mentioning that sentiment is so weak, and we have a major catalyst on Wednesday, which is going to be the Fed. Now, I personally don't think that the Fed can save us. Save us? No. I don't think that they can, but I mean, you never know. They might come out and say, oh, things are so bad, we're gonna not raise as much. I don't know. They could say anything that could cause an upwards stroke of hope that could cause all of these short sellers to cover. What happens when everybody's short at the lows like that and then there's some sort of news is usually you'll see a gap up overnight. So I don't know, let's say tomorrow, let's say Wednesday, let's say Thursday. You never know exactly when it's going to happen. It usually happens with a gap up. Sometimes it'll happen intraday. You see a gap up overnight, maybe like 2% or more, and then all of a sudden, all those people who are all on the short side, they say, oh my gosh, this is terrible. I'm losing money. I got to get out. Those people, when they buy back their shorts, cause buying. And then also what will happen is that not only those people buying back their shorts will cause upwards trajectory, but then other people say, oh my gosh, the low's in, it's time for me to buy. And then you get just a massive, upwards trajectory. Now, I'm not looking for that to save the market. I'm just looking for it to be a moment to get price back up into here so that I can continue back down on the short side. But if you really want to trade it, the way that I would suggest doing that is by looking at what were the former market leaders, because these ones are usually the ones that rally the hardest on the short squeeze. Now, just want to be very clear, I do not advocate buying them right now or at any period in time that is before a rally sets in. So, not trying to catch a falling knife. I'm saying once it starts kicking off, once you see that volume and momentum coming in, those are the ones you can day trade for either a day or, 2 or 3 days. AMD is usually one of the best ones. This is one that, the last short squeeze, it rallied really well off the lows. It traded all the way from 83 up into 109. So there's definitely movement there. AMD is usually one of the best ones. Tesla is also usually one of the best ones, but I can tell you, I mean, these chart patterns, they don't look good. You're in a bearish downtrend. Clearly nobody was excited about the squeeze. Not the squeeze, the split. So it's not looking good right now. It's looking pretty bleak and dreary out there. Sorry, I don't know what's wrong with me today. Bleak and dreary out there. But overall, there's going to be some opportunity. It's probably going to be soon, and it's probably going to be in the form of a short squeeze. So if you want to learn more, you can go and sign up for my newsletter. My newsletter is at 5startrader.com, FIVE, and you can sign up right here. And you can get some tips, tricks, and twice per week trading analysis and, you know, what I'm looking at. So if you have any other questions, let me know. You can also follow me on Twitter at Trader Danielle. Other than that, I hope you have a great rest of your evening, and I will see you next time.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.